Today is Sunday, November 29th, and this is a post-market review for the stock market activities on Friday and an outlook for this upcoming week. I hope everybody had a very good Thanksgiving, aka the annual Carbs Festival, and you also indulged yourself in a splurge of shopping spree during Black Friday. Here is the agenda of the day, and what we are doing differently this time around is we're going to review some of the trades we have open last week and earlier this week, and also some of the trades that I opened on Friday. We're gonna go over all of those, and we're talking about the usual charts: the SPY, the Qs, the VIX, dollar index, gold, TLT, TNX, Apple, and Tesla. But we're also talking about the charts of the trades we have open for Hershey's, Honda, KRE, Nordstrom, Simon Property, Target, Dominion Energy, Palantir. So we're going to take a comprehensive look on all of these trades in the charts for them. And lastly, we're going to conclude with an evaluation of where the IWM is and a preview of the economic calendar. And before we dip into the market's coverage, let me show you something for this week. Here is the chart of the SPY and the activities that happened throughout the short trading week. I'm highlighting this to you. This is a 1 hour chart, and it shows you your gains exactly if you entered the trade in the morning, first thing in the morning in the SPY, and you sold by the end of the day, meaning that the daily gains for the SPY during the trading session. All in all, the weekly gains are 0.67%, not even 1%. Now contrast that with the weekly gains, and somehow, magically, the weekly gains are at 1.8%. How did that happen? The answer is the overnight pumping via the mysterious entity, quote unquote. And of course, they're pumping using their passive investing accounts with Vanguard and BlackRock, etc. They're playing the game, they're trying to pump the market for whatever reason it is, and I'm not even sure if they want to pump the market legitimately or if they have a sinister reason behind it, aka pump and dump. With that being said, let's check out on the performance for the market on Friday. And here we go. The Dow Industrial Average closing in the green by 37.90 points or 0.13%. The Nasdaq, the leader of the day, 111.45 points or 0.92%. The S&P 500 in the green, 8.70 or 0.24%. To the upside. And here is the daily performance for the sectors on Friday. Leading the day, one of the laggards for the week, healthcare and capturing the gold, communication services at number 2 for the silver, and technology. It is a tie between communication services and tech, but in this case, we will give the bronze for technology because technology is the douchebag of all sectors. What lagged the day? Utilities, energy, and financials. Now let's contrast this picture with the weekly performance of the market sectors. And right away, we see energy week after week now since the elections. Number 1, capturing the gold medal by far. And number 2, consumer cyclicals for the silver and basic materials for the bronze. All market sectors managed to close in the green for the week. However, the laggards are real estate, consumer defensives, and utilities. Shifting to the futures market and how they closed on Friday. Right away, you see a modest retreat for crude oil, but we do see a resumption of the rally in softs, specifically coca, cotton, all closing over 1%, OJ, coffee, the gainer of the day over 6%, and some traders ask me about coffee futures. They are on a breakout. They took a modest retreat. That was a buying opportunity, and now you see coffee surging higher and higher. If we're talking about vaccines and reopening, then the demand for coffee will surge higher. Combine that with supply shortages due to the weather in Brazil and other coffee-producing territories, and you have a perfect formula for a rally in coffee futures. Lumber closing the day over 2% or so. Sugar muted. Sugar been lagging for a while here, and we're seeing it slightly turning and shifting to the green destination. What about metals? More pain for gold, breaking the very important level of 1800. Similar story for silver, down almost 3%. Platinum taking a break, but we do see copper. The gains continue over 3%. And here we go, palladium breaking out finally, up over 4% or so for the session. Meats muted to the red, and we see grains, big gains here for soybeans, soybean oil, corn, wheat, rough rice, and canola. But the weakness continue in oats futures. And now, moving on to the big casino, the options market. And here are the leaders of the day. Number 1, Tesla. The squeeze continues. However, I have a feeling that it is coming to an end. 1.4 million contracts traded on Friday, about 68% of those were calls. And at number 2, Palantir. And let's take a pause here and talk a little bit about PLTR for a second. Remember that the Robin Hoodites have an attention deficit disorder. They're chasing whatever the hot name is. Last week, few weeks actually, was NEO. Now it's Palantir. Next week, it's going to be something else. All they do is creating gamma squeezes, pushing these stocks higher and higher. Somebody, of course, entered the trade early when the stock was boring, and then they issued the idea on TikTok or Reddit or whatever the hell they get their information from. And now you see the stampede of the Robin Hoodites buying Palantir, and then the early entrance for the trade would dump, take profits, and you will see a lot of bag holders in this name. And by the way, all of this options trading mania is actually good for bankers, the ones who are selling you the options to gamble with, because all they have to do is sell you the call option on Palantir and they buy the stock and they ride the ride higher, making a ton of money. And then when they're ready to dump, they sell the stock, making sure that your call options are going to expire worthless. So please be careful if you are chasing these hot trades, and instead of chasing them, do what I'm doing instead, because the facts are on your side. Remember this article from Bloomberg that I presented to you a few days ago. They studied all the stocks that the Robin Hoodites did the herd mentality and stampede Naruto style on. And they found out that after the initial pump of the stampede, a month later, and that is an average, a month or so, the particular stock ends up declining, aka it is a pump and dump and a shorting opportunity. What did we have for Palantir on Friday? Citron Research came out and said that the stock is a short, and the target is $20. Now, Citron is the boogeyman for the Robin Hoodites because they've ruined a few trades for them, mainly Nicolas. Citron called the top precisely, and the stock collapsed from that point on. So again, be very careful trying to chase these trades. But here we go. About 1.4 million contracts traded on Friday. About 58% of those were calls. And by the way, we placed a put options trade on Palantir. We'll talk about it during the charts analysis. And we have Apple at number 3 with about 900,000 contracts. About 73% of those were calls. And check out NEO. They're moving from NEO to Palantir. These are the Robin Hoodites. NEO, only 600,000 contracts. About 67% of those are calls, signaling that the end of the rally in NEO is coming very, very close. Moving on to some interesting trades I have found for you during Friday's session. And right away, you see this very interesting trade for Snapchat. They're buying the 51 calls, expiration date December 4th, which is also this upcoming week, and also buying the 41 puts, same expiration date. And this is pretty much a bet that we will see a massive move in Snapchat one way or the other during this upcoming week. At least this is what the trader is thinking. They don't know it's going to be to the upside or the downside, so they're buying both calls and puts, costing them about 40 cents a piece. And if we do see the stock declining significantly on Monday, Tuesday, or gaining significantly, one way or the other. It has to be a very volatile move up or down. This trade is very smart and the trader will be rewarded. Another way to think about it is that the trader is selling, because remember, each trade has a buyer and a seller. Somebody's selling the 51 calls and the 41 puts, and the seller is assuming that the stock will remain static during this upcoming week. So we'll see what happens here with Snapchat. And here is an interesting one for the SPY and the cash index, by the way, the SPX, because both of these trades are puts and they are very, very bold. The trader here for the SPY committing over $500,000 shorting the SPY, buying the 332.5 puts, expiration date December 11th. Looking for a decline of over 8.5% in the SPY. This is very significant and you have to pay attention here. Now for the cash index, they're buying the 3,000 puts, expiration date December 9th. The cash index trade is likely to be insurance trade, meaning that somebody is buying protection on the downside. And this is why they're committing about $700,000 to enter this insurance trade. In case the index collapse, we have a crash, a big correction of over 17.5%. But it is notable because they're buying insurance very heavily throughout the week. Another one for Apple, and this is very intelligent by the way, buying the 106 puts, expiration date December 18th. Remember that the 106 is very, very solid support for Apple. So this trader is expecting about 10% declines in Apple by December 18th. And then perhaps closing the trade on the support line of 106. Here is another one, big one for Tesla, costing over $1 million, buying the 555 puts, expiration date this upcoming week. Very interesting. Moderna, we see a put here, the 100 puts, expiration date January 15th, with expectation that the name will collapse over 21% by then, and they are committing over $250,000 for this trade alone. But you also see calls for Moderna, buying the 145, expiration date December 4th. And you see here that traders are betting on more upside, more squeeze for Moderna in the short term, but a decline thereafter by January. What about the KRE, regional banks? Somebody's buying calls here. 53, expiration date December 18th, and they are committing almost $500,000 for this trade. Now it could be that they're selling upside calls for the KRE, because remember, I am buying puts on the KRE, betting on a decline. So we will see who's right here. Now, here is an unusual one for Goodyear's tires, GT rather. They're buying the 12 calls, expiration date New Year's Eve. And this is a significant one because you don't see this name usually traded this heavily in the options market. And we continue to see upside calls for Microsoft, Tesla. I don't know what they're seeing here with Microsoft, but I saw multiple bets for Microsoft to the upside by the end of the year. Continuing with interesting trades, you see the ticker TAN for solar. They're buying the 95 calls, expiration date December 18th, and they're committing over $500,000 for this trade alone. We also see GameStop. They're gambling on GameStop, and again, it's the donkey mentality of these morons buying all of the Thanksgiving names ahead of time. They bought Macy's, Nordstrom, GameStop, as if GameStop is going to do better during the pandemic than before. We'll talk more about GameStop in the charts analysis because we could see a shorting opportunity very soon. The other notable trade here that I want to show you at the bottom of the table, the IWM. Somebody's buying the 167.5 puts, expiration date January 8th. And they are committing big bucks here. Over 800,000 were committed for this trade alone. So again, this particular trader agrees with me that we will see a pause in the rally for the IWM and perhaps a steep decline from this point on. Moving on to the headlines that shaped the day, and right away we had Black Friday, the shopping season. And let's hope that this time around, due to the circumstances, things went smooth and shoppers were calm, collected, and civilized. Well, when you look at the picture here, yeah, they're crowding, but at least they're wearing masks, so don't be too harsh on us here. We're doing a good job. This time with Black Friday. Oh, wait a minute. What does this say? Florida Walmart evacuated after Black Friday parking lot fire. Okay, Florida, it is the exception. It's in the parking lot. It could have been an accident. But still, all in all, things were very calm, collected, and civilized, right? Whoops. 2 shot killed at Northern California Mall on Black Friday. All right, I guess certain things don't change. And speaking of Black Friday, I want to show you this out-of-touch elitist moron who came on CNBC predicting that this holiday season spending will exceed all expectations. He gave very rational reasoning for his prediction.
Jan, I'm going to start with you and just ask what you think this holiday season is going to look like overall for the retailers, because things are different everywhere.
I think you just told us, because I think it's going to be a strong holiday season. And I think it's going to be a strong holiday season in my kind of retail, because the experiences aren't there, restaurants aren't there, you can't throw a party, the cases of champagne don't have to be bought, you don't have to pay the caterers.
I don't know if you heard that or not, but he's basically saying that the shopping season will exceed expectations because we're not going to be spending any money on parties and cases of champagne, and instead we're going to spend it on sweaters. I don't know about you, but all of these people waiting in lines, miles and miles in food banks, I'm assuming they're not going to be popping the champagne this season too. And I don't know if you caught what he said when he talked about caterers. We're not going to be hiring caterers. I mean, these people living in a bubble like you'd never believe. How about you guys? Are you guys hiring your caterers this year? Or are you going to save in money and go splurging on shopping instead? Me, I'm not hiring my caterers this year, and I also got rid of my busboys and my harem, aka my bitches. I mean, it's tough to be a pimp in 2020. So I guess I'll be saving a lot of money and buy a lot of sweaters this holiday season.
None of that's going to happen. It's all going into sweaters. So yes, I'm enthusiastic. I think we'll see sales up in the 5% range, and I would have never dreamed that when all this started. But I've done the same thing you've done. I've already got my poinsettias up. You know, I've already got the wreath up. The trees are on order. They're coming Tuesday. So I think we've all done the same thing. And if you haven't already started your holiday shopping, because October 10th is when everybody else started their holiday shopping, you're behind the curve, and you're not going to get what you want because inventories are.
Don't remind me. You're stressing me out. I haven't done that part of it yet.
Oh, and listen to Becky Quick. She didn't even bother challenging him. And she's like, oh, don't remind me. I have so much money I don't know what to do with. Don't stress me out, please. When I hear these people talking, I'm not a socialist, but I'm thinking tax the hell out of these people. Continuing.
Hey, Jan, let me ask you, just between the discounters and the broad-based companies that are out there, there could be some separation too. I think I was a little surprised between Target and Walmart for this last reporting quarter that we just got I guess it was earlier this month. The numbers showed that traffic was up, at least at Target, maybe not quite as much in terms of the basket size at Walmart. And I just wonder, are people at the lower end of the spectrum, are they really starting to feel that pinch? And where is that going to show up in retail? Because there are a lot of Americans that are still suffering right now.
Well, undoubtedly that's true, because we see the numbers all the time, but you can't really see it in the sales.
Bingo, there it is. Remember what we've been saying all along about this bullshit lump sum data that shows you that consumer spending is up. Who's consuming here? Is it the 1%, the rich, the haves? Yeah, they are on a splurge, on a spending spree, exaggerating all of these numbers. But when you break down the consumption by demographics, you see that there is a lot of pain in the poor and middle class. The majority of the spending is happening from the haves because the pandemic is the best thing that ever happened to them. Different story for the poor and middle class. They're struggling to pay their damn rents. They don't have money for sweaters, let alone caterers and cases of champagne. And here is the real data. Black Friday starts with a whimper. Oh boy. And this is the preliminary data from Adobe saying that online sales for Thanksgiving Day hit a new record with consumers spending $5.1 billion. That's all from Jeff Bezos, by the way. An increase of 21.5% from a year ago, according to new data from Adobe Analytics. But the results came up far short versus Adobe's prior estimate of 6 billion. We're short 1 billion or so here. Continuing, while yesterday was a record-breaking Thanksgiving Day with over 5 billion spent online, it didn't come with the kind of aggressive growth rate we have seen with the start of the pandemic. Heavy discounts and aggressive promotions starting in early November succeeded at getting consumers to open their wallets earlier. So it is not because they have a lot of money coming out of their ears and they can't wait to splurge. It is because businesses are desperate and they are issuing steep discounts, sacrificing their margins. Continuing, shares of major retailers such as Macy's and Nordstrom and Canada Goose fell sharply after Adobe's new data. And by the way, we shorted Nordstrom perfectly and it went down over 9% right away. The ho-hum start to the peak of the holiday shopping arrives as the economy weakens amidst the resurgent pandemic. U.S. consumer confidence tanked to 96.1 in November from 101.4 in October. I wonder why. According to the conference board on Tuesday, it marked the lowest headline reading since August when stimulus was still around. And here is the last bit, the survey from Goldman Sachs. Meanwhile, about 53% of 1,000 consumers recently polled by Goldman, I'm assuming all of these are billionaires since Goldman is conducting the survey. But all jokes aside, here we go. Recently polled by Goldman said that they plan to spend less this holiday season. Even the rich are having a tough time. Roughly 23% said they would spend the same amount as last year, but dig beneath the headlines and some of Goldman's pre-holiday learnings fall under, and here it is, are you ready for it? The disturbing category. The survey showed 20% of consumers plan to spend substantially less, while only 7% indicated they will spend more compared to 2019. By demographics, 62% of baby boomers surveyed said that they would spend less compared to 42% last year. And this is the Goldman survey, by the way. Meanwhile, this moron that CNBC interviewed is saying that, we're not going to have spending on cases of champagne and caterers and busboys and parties. So we're going to have a lot of money to spend this holiday season. Give me a break. What value does CNBC present to retail investors by interviewing these savage, elitist, out-of-touch morons? Moving on. How are we rewarding the hardworking people who are making sure that we're going to have all the goods we're going to splurge on this holiday season? Here it is. Amid astounding growth, Amazon throws workers a bone. Just a bone. So let's see how much is this bone. It's a $300 holiday bonus. You kill yourself for $300. Meanwhile, the owner of the company is the richest man on the planet, and he just cashed over $10 billion in cash by dumping his stock. Amazing stuff. Speaking of the richest, let's talk about the second richest man on the planet, Reverend Elon Musk and his company Tesla. And Tesla surpassing Berkshire Hathaway in market value. Tesla, that produced about $24.5 billion last year, is now worth more than Berkshire Hathaway, which produced over $250 billion in revenue last year. But I know, bro, it's the software and it's the robo-taxis and it's the screen and it's the cheap Home Depot bolts. You gotta put a premium on that. Let's see how this moronic rally will end. It's gonna end in tears. You know it and I know it. Remember in 2000 when Qualcomm exceeded Berkshire Hathaway's valuation or came very close to it? That was the market top for Qualcomm and it collapsed from that point, and it took 20 years for the stock to reach that valuation, meaning that if you bought Qualcomm at the top, you've been a bag holder for 20 years. I see a similar thing happening here with Tesla. This whole arrogance that the Tesla cult's been enjoying for the last 2 years is coming for a very painful ending. Oh, and by the way, how is this $500 billion company doing? Here it is. The TSA probing Tesla over suspension safety problems in 115,000 vehicles. That is a massive number considering the very small amount of production that Tesla does. Tell me again, this company's worth $500 billion. I'll call for help for somebody to pull your head out of your ass. I'm not going to do it personally, but I'll ask for help for you. Moving on to the heat map analysis, and right away, let's see what happened on Friday. We see a shift in the rotation trade. The hot sectors, financials, energy, the comeback stocks are taking a break, while the Nasdaq technology is bouncing back, along with healthcare, the laggard for the week. Right away, we see modest gains here for the big boxes of Apple, Microsoft, Google, Facebook, even Amazon managed to close in the green on Friday. Muted action here for semiconductors, but we saw impressive gains for the software sector in technology. Adobe closing in the green, Atlassian, aka Team, now Workday, all closing in the green. What about communication services? We talked about Google, Facebook, but Disney is taking a break here, a decline of over 1% on Friday. Netflix, different story. Disney's declines equals to Netflix gains. A rebound in video games, electronic arts, Activision, Take-Two, all closing in the green. T-Mobile resuming their rally with over 2%. And what about Zoom? We've been talking about Zoom since last week, that amateur traders will do what is expected and predicted from them, buying all the Thanksgiving names ahead of time. You see them here buying Zoom throughout the week. What do we see with consumer cyclicals? Muted day across the board. Tesla, we know the story here, but check out Honda Motors, a name that I shorted, declining a little more than General Motors and Toyota. We will talk about the chart of Honda Motors during the charts analysis. Declines here for hotels, modest declines for Marriott, but Hilton declining significantly. Muted day for apparel, casinos, and cruises. What do we see in consumer defensives? Also muted action, no notable gainers here, and no notable decliners either. What about REITs? The notable decliner is Simon Properties. We're talking about this name because I have a put options trade that I will talk about during the charts analysis. And we see the resumption of the pain for public storage. What about utilities? The declines continue here. More pain for Duke Energy, Dominion, Next Era, all declining on Friday. What about basic materials? Another day of a very baby rebound for gold miners. The weakness in gold continues, but we see that the strength in copper also continues. Freeport-McMoRan closing in the green. In another name, Vale, V-A or V-A-L-E. This is a miner from Brazil, and it's been an outstanding performer for weeks now, along with Freeport-McMoRan, the best two names in the materials sector. What's going on here with energy? The winner of the week, but the laggard on Friday. You see Chevron, Exxon taking a break, but all in all, modest declines when you compare it with the very big weekly gains. What about industrials? Muted picture across the board. The notable gainer here is Deere, and the notable decliner is NOC, Northrop Grumman. The weakness in the defense sector continues. LMT, NOC, a different story for Boeing and Raytheon. What about healthcare? The laggard for the week. Bouncing on Friday, massive gains for Moderna, double digits. We see gains for Pfizer, Amgen, Eli Lilly, but Merck lagging the day, closing in the red. Healthcare insurers, whether it's Humana, United Health, Cigna, all closing big for the day. What about financials? Mostly in the green. We see regionals, which been a very big winner for weeks now, taking a break on Friday, declining significantly. Muted day for big banks, and we see a retreat for PayPal, another winner for the week, and the rest of credit services. Contrasting the picture from Friday with the weekly picture, and we see right away the notable decliner for the week is Apple, down over 1.7% when you compare it with the other big boxes of tech, Microsoft, Google, Facebook, Amazon, even Netflix, all closing in the green. Notable weakness here for Apple, and perhaps it is because some insider selling. We know Buffett sold a little, perhaps more investors are selling. We will find out during the insider selling report this upcoming week. And another notable decliner for the technology sector is VMware, down over 4%, and Salesforce down over 6%, almost 6.5%, due to the rumors of the acquisition of Slack. The notable gainer in the tech sector is Intel, over 4%, and check this name, IBM, old school, up over 6%, and of course Shopify, almost 7%. Massive week for Shopify. They're buying the Thanksgiving shopping names ahead of time. Very easy to explain. Communication services, what's going on? Big week for Snap, Spotify, Comcast, Disney, video games, Zoom, very predictable here. All in all, the communication services sector did very well this week. What's going on with the consumer cyclicals? Notable gains across the board. Amazon, Tesla, we know the story, General Motors, big retailers, Home Depot, Lowe's. In the apparel sector, we see Lululemon is the winner. Marriott continues to outperform Hilton, but a different story for casinos. We see Las Vegas Sands is the laggard when you compare it with Wynn and MGM Resorts. Big week for Wayfair, Alibaba, all the Chinese names rebounding, and we do see Royal Caribbean and the rest of cruises also having a very significant week to the upside. What about consumer defensives? Right away, the notable gainer is Target, the winner by far. However, the decliner here is HRL or Mel, but a different picture for Tyson closing in the green. Another notable winner is Budweiser, BUD, up over 3% or so. Different picture for REITs, pain across the board, specifically for public storage, PSA. But we do see mortgage REITs and Simon Properties doing very well for the week overall. Utilities, mixed picture. We saw a little bit of a rebound in Duke Energy. We're waiting for a rebound in Dominion. I have a trade for you here for Dominion Energy. We'll talk about it in the charts analysis. And what's going on with materials? Green across the board. Copper, the biggest winner here, Freeport McMoran. However, it's another week of pain for gold miners, declining significantly. We're talking over 5% for the biggest names. Different story across the aisle for the energy sector. Massive gains. Exxon over 7%, Chevron over 6.5%, sorry. Big gains for British Petroleum, Phillips, Marathon, and the biggest winner by far is Oxy Petroleum, OXY. The name is up over 80% since the lows. What's going on with industrials here? We talked about Boeing and Raytheon, a big contrast when you compare them with Lockheed and Northrop Grumman. Another big week for the squeeze in General Electric. Airlines doing very well. The majority of industrials, whether we're talking about Emerson, Honeywell, 3M, Caterpillar, all closing in the green. Mixed picture for healthcare. Johnson & Johnson declining. However, this could be a buying opportunity because we do have pending news for the Johnson & Johnson vaccine very soon. The biggest winner by far is Moderna, followed by Vertex and Illumina. However, we did see declines for Abbott, ZTS, and AstraZeneca. What's going on here with financials? Big gains across the board. The gains are starting to be a little modest for regionals here, but big banks continue to gain. The notable gainer is Wells Fargo, over 8%, along with the credit card services, notably American Express and PayPal, over 10% for the week, and we know why. Massive gains for Morgan Stanley and Goldman Sachs as well. Goldman Sachs over 4%, Morgan Stanley, my favorite, over 8%, almost closing at 9% in the upside. The notable decliner here for financials is PGR, Progressive Insurance, down over 6% for the week. And before we move on, let's check on the ETFs. The weekly performance, right away you see any inverse index, whether it is the SDAO, the short DAO, the short triple Qs, the SPXS, the SPXU, all closing in the red. The biggest decliner by far is the TZA, shorting small caps. However, I see a reversal here and I see a buying opportunity for the TZA, betting on a reversal in the IWM to the downside. Any leverage index for the VIX declining significantly, although we saw the UVXY climbing higher on Friday by the end of the day. Big gains for the XOP, XLE for energy, XRT for retails, up over 6%. And of course, Friday's gains in the tech sector lifted the leverage indices for the Qs, primarily the TQQs, closing big in the green. Moving on to the rotation trade, here is the weekly scoreboard. Gains across the board, no exceptions, very few ones here in both aisles of the rotation trade. The momentum names, the biggest winner by far, Tesla, followed by Zoom and PayPal. The laggard, the notable one, is Nvidia, down a little over 1%. What about the comeback stocks, aka the reopening stocks? The notable gainer here is Cruises, Royal Caribbean, almost 10%, Six Flags, over 10%, Chevron, over 6%, Planet Fitness, massive rebound, over 8%. But the laggard, the notable one, is Cisco, down over 1% because we have seen some insider selling, significant insider selling activities for Cisco, notably by Nelson Peltz. Moving on to the charts analysis, starting with the SPY, 15 minutes perspective. What do we see here? Very low volume activities on Friday. We gapped higher, surprise, surprise, and then we saw a sell-off early in the morning. However, a rebound and closing pretty much flat. The resistance line remains 364.40 and the support at 359. Perhaps the mysterious entity will give us another gap higher on Monday to beat the resistance. So what do we see here from a daily perspective in the SPY? Right away, we talked about the flag consolidation, and we said it is consolidating very close to all-time highs, which gives the probability for the breakout to the upside. This is exactly what happened, but now we do have all-time highs, which is a very strong resistance. The bulls are saying it is a matter of time before we defeat all-time highs. Another gap higher, and there goes the all-time highs. Goodbye. To the moon we go. The bears would say, be careful here because the resistance is very strong at all-time highs. We could see a double top formation and a reversal from this point on. What about the weekly chart? The weekly chart is very bullish. It is a bull flag formation. And unless we close below the gap from the flagpole, we are still bullish. My job is to present to you the charts from an unbiased technical perspective. We know the greed index, we know the overbought conditions in the market, etc., etc. But the charts right now are not saying that there is any danger ahead. But you have to remember that every crash and strong correction came out of the blue at all-time highs. And you had a little taste of that with Bitcoin this week. So you have to keep that in mind. What's going on with the Qs? 15 minutes perspective. We see a gap higher and capturing, struggling, looping around the level of 299, turning it between support and resistance. What do we see from a daily perspective? We talked about the consolidation, that it is gathering of energy that will break one way or the other. We have the answer now. The break came to the upside, and the Qs traded almost very close to all-time highs, and that becomes the destination to reach as a goal, and it becomes a magnet for the chart to follow. What's going on from a weekly perspective? Again, the chart is bullish from a technical perspective. I cannot look at this weekly chart and say that this is bearish by any means. This is a bullish chart, perhaps creating a new trend line. I'm not speaking with both sides of my mouth here. I showed you certain indicators showing that we are very overbought and we are due for a correction. But looking at the charts right now, you are not going to see it coming because the chart is very bullish. Moving on to the VIX, and the VIX gives you a confirmation for the bullish chart. Is this a trick in the making? Certainly possible. We've seen them happen before, but for now we read the charts as we see them, and you see the VIX closing further away from the pivotal point of 24.8, signaling weakness. However, we saw a gain for the UVXY on Friday, specifically late in the session. And the reason is the FOMO. The bears have FOMO too. They want to jump on the trade before it takes place. So they're buying the UVXY, betting on the spike, on volatility next week, before they see any signal from the VIX itself. They've been proven wrong before. Are they going to get it right this time around? We shall see. But we're not going to jump into the trade before we get the signal from the actual VIX. Moving on to the Dixie, the dollar index. We've been anticipating a bottoming process for the dollar and a last act before the collapse, blasting higher. That is not taking place so far. All what we saw this week is declines for the dollar index, and this is a weekly chart. You know my long-term target is the 88.5 level, but I do believe that the Dixie has a trick up its sleeve, a final act to perform before reaching 88.5. Moving on to gold. What's going on with gold? A painful week, piercing below the very important level of 1800. Now, the picture is starting to change in favor of gold. We saw a very massive decline in Bitcoin. People dumped gold and bought Bitcoin because it is the quote-unquote safe trade. This week was a reality check for that assumption. That is number one. Number two, if the dollar is going to continue to decline, then gold will gain. That is a no-brainer. Number three, if I am right, and we will see declines in yield, and we're not talking about a collapse, we're talking about a break, retreating for a little while before gathering energy to push to the psychological level of 1% on the 10 years yield. But if we do see a continuation of the decline in yields, gold would rally higher. I know the chart looks very risky here, but I am betting on a bounce for gold this upcoming week. Speaking of yields, let's move on and talk about the TNX. Here is the outlook from a daily perspective. Remember, we saw the bull flag formation, and by the beginning of the week, I told you I don't buy it. I think that the TNX should have blasted higher from the bull flag consolidation. The fact that it is breaking out very weakly suggests that we're going to see a lower low and declines for the TNX. Perhaps they're going to reach 1% someday, but it is not going to happen soon. It was a very tough call because every indicator was in favor of yields to climb higher. I was confident in my call, and you see that the TNX did a lower low and it declined on Friday, signaling that the bull flag formation is down the toilet. What about the mirror image of the TNX? In contrast, the TLT. Here is a weekly chart for the TLT. Yes, closing below last week's closing. However, it is still a positive rebound from the lows, and we see some signals and signs for demand on bonds. If we do see the TLT breaking higher, that is one of our conditions for an overall reversal in the stock market. Moving on to Apple, and here is a weekly chart, and I'm about to confuse you just a little bit. Are we seeing a bull flag formation for Apple? Apple been consolidating, lagging the market. Are we going to see a breakout to the upside for Apple? If my theory is correct, and we're going to see a rotation of the rotation this upcoming week, where traders are done with the holidays names and Thanksgiving names such as Macy's, retail, banks, energy, etc., all the cyclicals. If they're going to dump that trade, we're going to see a decline in the IWM small caps. Will that money shift back to technology? I think absent of a catalyst that would scare the market overall and cause an overall correction with the Qs, the SPY, IWM, everything declining, I think that the money will shift from the IWM, taking the gains that happen very fast and quick, moving them back to technology, and Apple could be a gainer this upcoming week. Just keep that idea in mind. What's going on here with Tesla? Different story. Tesla is starting to show some signs of exhaustion for the gamma squeeze rally. Remember that my level for the RSI is 84, where I'm willing to enter the trade. That could happen as soon as Monday. But remember, most traders will place bets ahead of time, perhaps by Monday, buying put options for Tesla, betting on a decline, at least to go back and revisit the trend line. My number is 84, but I do think that the name will reverse before hitting that level, just to mess around with me. And here are the open trades that I have. These are option trades, the ones that I have open from last week and earlier this week, plus the trades that I entered and issued on Twitter on Friday. Now, I might be forgetting some trades here that I might have closed without telling you, so if you notice anything, let me know. However, differentiate between actual trades versus trade ideas. Actual trades are the ones I announce on my Twitter account. Trade ideas are trades that we talk about as a potential for entry. We talked about Pfizer, for example, and Alibaba. These are trade ideas, not actual trades that I entered. So here are the trades that I have open from last week and earlier this week. For the SPY, Hershey's, Honda, the KRE, and Nordstrom. And on Friday, I opened new trades for Simon Property, Dominion Energy, Target, and Palantir Technologies. All of them are puts, with exception to Dominion Energy. I bought calls for this one. So let's talk about them, starting with the SPY puts, which I bought for February expiration. And by the way, I try to avoid telling you the exact strike price and expiration date for my trades. Not because I'm afraid of being wrong. I could give a rat's ass if I'm wrong. I want to present to you the idea, the entry point, the exit point, and the technicals. The construction of the trade, that is up to you. And by the way, your construction of the trade could be a lot better than mine. Don't take my construction as I am the Messiah and I'm all-knowing. Your construction could be a lot wiser than mine, and I'd like to hear how you are constructing the trade. However, if you ask me, I'll tell you right away which strike price and expiration and construction I'm entering for any specific trade. For this one, I'm buying the February expiration for 2021, the SPY, at the 350 level. Now, if you look at the monthly chart here, you see the SPY is very elevated. But I am betting on a correction that will take us all the way back to visit the 20-month average by February, and that is a decline of about 14% from the highs. Remember, my strike is at 350, so if we reach anywhere near 350, the trade will be very profitable. And if we start seeing declines as early as this month, upcoming month of December, the algos immediately revert to the coding, and the coding says by February puts for the SPY in the Qs and whatever index it is, because historically speaking, February is the worst month for the stock market. Therefore, the implied volatility for February expiration surged really high during market declines in November, December. We saw this phenomena happen back in 2018. During the declines in November and December, the February puts exploded higher in value, matter of fact higher than the March puts. So you got to keep that in mind. In the meantime, I will continue to sell shorter expiration puts to lower my entry price for this particular trade. Here's the next trade for Hershey's. Remember, the entry price was 155. We talked about this one last week due to the explosion of coca prices, the coca futures. There's a price war going on with producers and suppliers, all in all, surging coca prices to extreme highs. That would mean more pain for Hershey's. And I already closed half of the trade. I announced that on a previous video, and I'm letting the other half ride all the way till expiration. I already made my VIG from the trade. Whatever gains I'm gonna make from the other half is just the cherry on top. The exit number is 145.5. Moving on to Honda Motors, and this is a weekly chart for Honda. The entry level was around 29.35. You could round that down to 29. We've seen all Japanese stocks on a breakout from a 30 years consolidation, and Honda is benefiting from the ETF effect. However, I am betting on a retreat, a pause in the rally for Japanese stocks, specifically here Honda Motors, and the target is at 26.35. Again, you can round that down to 26. And the expiration date for this particular trade is January 2021. This is the way I opened the trade. And the strike price was in the money, the $30 puts. And the reason is, this is a slow name when it comes to the options. I don't want to buy out of the money put and watch it decay due to the theta. And it is the reason why I bought the put option in the money instead. Again, you can construct the trade with any creative way you want, but this is my construction here. What about the KRE? I have the 45 puts expiration date January of 21, and the trade did not work the first couple of days when I entered them. However, we saw declines on Friday for the KRE, and the level of 49.5 remains very strong resistance. I'm betting on a decline all the way to the level of 45 and perhaps beyond, closing the gap in or around the level of 42. We'll see if that happens or not. And what about Nordstrom? This is a trade I entered earlier this week, and in this case, I bought the 25 puts expiration date December 25. The name already declined from the target. I was waiting for it to hit 29. That was my shorting entry point, and you saw the name decline over 9% from that point on. I expect the name to continue to decline over 20%. The pump pre-Black Friday will be followed by a dump for these names, Nordstrom, Macy's, etc. And this trade could be very, very profitable if we reach the 20% target correction. Here are the new trades. that I issued on Friday. Number one for Simon Properties, the ticker SPG. What do we see here? Reaching the 88 resistance, reversing. It is a clear reversal over both conditions from a daily perspective. And the target here, we're not talking about a massive collapse or anything. We're talking about 10% correction from the highs, stopping at the price of 80. Now, the way I constructed the trade is a spread. Buying the 80 puts expiration date December 18th, and I sold the 75 puts expiration date also December 18th. All in all, the entry price at around $1. If we do see the name declining this week, reaching anywhere to 82, 81, this trade could even double or triple in value really quick. What about Dominion Energy? The trade for the 80 calls, expiration date December 18th. Let's take a look at the chart of Dominion Energy. The name been whacked really hard. However, we see strong support at the level of around 78.35. That is the entry point. We're buying the 80 calls, expiration date December 18th. They cost around 70 cents or so. They're very cheap. And if we see a rebound, 1%, 2%, in Dominion this upcoming week, you could make up to 50% gains very quickly. The exit point here at 81.20. But again, if we see a massive pop on Monday or Tuesday, I would probably exit the trade before the target hits. What about target? Here is the construction. Buying the 175 puts and selling the 170 puts, expiration date December 18th. All in all, the entry price is in around $1 per option. What do we see in the charts here? Remember my level in the RSI 79.5, but we were close enough. You buy the puts, it is a spread, entry price $1 per option. The target is a decline of 6% or so, all the way to the level of 170 by expiration date. If this happens and we stop at 170 by expiration date, a little over 170, your entry price $1, you will make $5 when you close the trade. That is $4 profits. You quadrupled your investment. That is the goal from this particular trade. And here's the last one I opened on Friday for Palantir. And I bought the 20 puts, expiration date December 18th. However, and again, construct the trade however you want. Your way could be a lot better than mine. Cetron says 20 is the target. Right away, you saw the implied volatility for the 20 puts, expiration date December 18th, exploding way higher than any other put option. Furthermore, it is an entry trade, meaning that I'm open to seeing Palantir gaining on Monday, Tuesday, and then I would average my entry price lower. So it is an entry trade. And what happened right away, here's a 15 minutes of Palantir. The moment I shorted and announced the trade on Twitter, the Maverick Wall Street effect takes place, and you see Palantir declining right away. I'm only kidding, of course. For all you know, Palantir could explode higher. On Monday, I'll have plenty of egg on my face. And this is why I say it is an entry trade. We're just opening an entry point for a shorting opportunity for Palantir. The gamma squeeze is still hot, but we saw a lot of signs for weakness here for Palantir, suggesting a tide shift happening very soon. Now, here's another trade, by the way, for the TZA that I announced on Twitter. I ended up buying the actual ETF instead of options because instead of spending 15 cents, in this case $15 for the contract, when the actual ETF is trading at $10, it doesn't make sense. You might as well buy the ETF itself because you cannot time the reversal in the IWM. However, if this is too risky for you, you can go straight ahead and buy puts on the IWM itself. So again, I did not enter this trade. I actually bought the TZA ETF itself. We have another one for SPH, and this is also I'm turning into stock trade, buying the stock instead of the options because the dividend is over 7%, and you see that the demand on propane will continue to increase in the next few months, but I cannot time when will the stock break out above the consolidation and the resistance level of $20 or so. Therefore, I'm buying the stock instead. Again, if I forgot any trade that you remember, please remind me on the comments and I will follow up with covering the trade. But again, differentiate between actual trades and trade ideas. Speaking of trade ideas, let's check out GameStop. Now, here's a stock that's doing better than it did pre-pandemic in 2019. I had no idea that the pandemic will be very good for GameStop to make a comeback. I say that sarcastically, of course. This is the Robin Hoodiots effect, pushing GameStop to the stratosphere. It is not worth anywhere where it's trading right now, and it is a perfect shorting opportunity. Remember, the Robin Hoodiots pump, about a month later, the stock collapses. I'm looking for the entry point here at the level of 17. If I see GameStop on Monday opening at around 17, facing a resistance, reversing from the $17 resistance, I will short the name. And by the way, let's talk about the XRT, the retail ETF. This is a monthly chart, and this is not a glitch. It's not an error. This is the biggest green candle I have seen in my life. And somehow, the struggling brick and mortar retail companies that were struggling way before the pandemic, all of a sudden the pandemic is the best thing that ever happened to them, and it is the catalyst for the reversal. And now we see retail names trading at all-time highs. This is the clearest evidence of the Ponzi scheme stock market we're in. The biggest bubble ever. And this is right there. Remember this chart because it tells you everything that is wrong with the stock market right now. Retail is worth more now than it did before the pandemic. Where the hell did rationality go? The market is irrational. And remember, it can stay irrational longer than you are solvent, but at the end of the day, this will come to a massive crash. Moving on to conclude this video. Remember about 3 months ago, here is my video talking about the rotation trade. In the thumbnail, I'm showing you the Qs are out, IWM is in. Another video 3 months ago predicting that the IWM will outperform the technology sector, the Qs, when nobody saw this happening. The IWM, the red pill, you buy it now, you get rewarded later. The Qs, the blue pill, you buy it now, you get rewarded right away. What happened since that call? Here is the 3 months performance for the IWM versus the Qs. Right away, both did well. However, the IWM outperformed the Qs by over 7%, almost 8% to the upside, meaning that my call was 100% correct. So what do I see now? I see the IWM from this point on reversing in underperforming the Qs. If we don't see the overall correction scenario in the stock market, what we are about to see very soon is the rotation of the rotation, taking profits from the cyclicals, small caps, and rotating those names back to big technology names such as Apple, Nvidia, Facebook, all the names that have been consolidating since September. Here is the last bit before I log off. The economic calendar, and we have a lot to cover this upcoming week. Right away on Monday, we have the Chicago PMI, and on Tuesday, the manufacturing PMI, the ISM Manufacturing Index, and also motor vehicle sales. That is a very important indicator to see if we're seeing a slowdown in the momentum of car sales. And on Wednesday, the ADP employment report plus the beige book from the Fed. So Wednesday is going to be a very important day on the economic calendar. And on Thursday, per usual, the initial jobless claims plus the services PMI and ISM, another very critical and important indicator. Lastly, on Friday, the big day, we have the big jobs report for the month of November. And if this one comes lighter than expected, and I have the hunch that it will, that could be the catalyst to rattle the market overall. So we're anticipating and waiting for what the jobs report would reveal about the status and the health of the real economy on the ground. That's all for now, and I wish you very good luck in trading this upcoming week. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.